See if we can get it over the line this time.
I'll say live up in the.
I'm going to sign on to YouTube and see.
All right, now we're live.
All right.
This is Value After Hours. I'm Tobias Carlisle, joined as always by Bill Brewster and Jake Taylor. It's 10:30 a.m. on the West Coast, 1:30 p.m. on the East Coast. This is take 2 for this morning. We pressed the button and nothing happened, but I think we're live now.
It's good to be live.
Hey, Counsel's in the house. What's happening?
Where's everybody from? Toby, give us the worldwide rundown.
Ocean City, New Jersey, Lisbon, Portugal, Tesla crashing, Phil Sampson. Sorry, buddy.
Whoa, come on.
Budapest, Redondo. All right. Israel, Chester, Stirling, Scotland. All right.
What's everybody's Thanksgiving plans?
Madrid, España.
Thanksgiving in the United States this week. I guess we should probably not be so U.S. centric. Family,
if other
turkey,
countries wanted to not have us be U.S. centric, they could have won wars.
Speaking of U.S. centric, World Cup going on now. Apparently, I don't know. I haven't been watching.
Yeah, me either. Sorry, it's not my game. Disneyland in the house too.
Yeah, that's soccer, right?
Soccer. Yeah.
Yeah. That was one of the funnier tweets about. I think it was when the U.S. dollar to the euro changed, went in like a little bit the other way, parody wise, and it was like it's soccer now.
Who was that?
I don't know. It was some
too good.
Yeah, just random tweet.
Too good.
What do we got on tap for today? It feels like kind of a little bit of a slow week, doesn't it, relative to what's been going on? I
agree. I got one thing that I kind of wanted to talk about. The FTX, Sam Bankman-Fried or Alameda, whichever one it was, probably Alameda. They sent this letter out to prospective customers when they were trying to raise capital.
That's an IOU. That's as good as money, sir.
I want to read some of the lines from that. And this guy has fooled, quite sophisticated investors. And I just want to read some of the lines from this so people can just see what it takes to fool sophisticated investors. Because
apparently the latest is more than $100 million worth of real estate that his parents purchased. 19 different luxury properties as professors. Oh boy, that's not looking so hot, is it?
I thought I heard that it was through his company, but his parents lived in one. I thought that was what I heard.
Well, okay. Either way, this is not proper use of corporate funds, is it?
He did a capital raise of 420.69.
If only there were clues as to the seriousness of this.
And then he just took 300 for himself, which I wasn't aware you weren't allowed to do that. I think was what he said. And it all went into this. There's only one bank account, so I don't know. I think it's a pretty unsophisticated fraud, honestly, from the outside, starting to look that way. I had never heard of him 2 weeks ago, but I didn't know what he did.
Sophisticated, but yeah, and yet the dollar amounts are
huge,
relatively large.
Yeah.
So, all right. So we have that. I've got actually a piece I'm kind of excited about. I haven't been excited in a while for one. So it's going to be on. We're getting into cellular biology today. That's hence my little background is some cells fighting it out, and then after that, we'll tie that back in with some decision-making science. So
looks like an ad for fruit flavored water or something like that.
Yeah, it does. It's like passion fruit and pomegranate seeds
moving around with some bubbles in there.
Yep. It
sounds very refreshing.
Yeah.
There's a few other things going on. I watched the 10-3 inversion pretty closely. The 10-3 inversion doesn't go back the data in the Edgar site doesn't go back that far. It only tracks back to I think it was 2000. It's early 2000 or something like that. So you can't actually see what precipitated the 2000. I think that's right. You can just see the recession called, but you can use the 10-2 to go back quite a bit further.
Mm.
And the 10-2 goes back to pre the 1982 So you can see it running. It's in the 70s, sometimes starts in the 70s. And the 10-2 is currently more inverted than at any other time, going all the way back. You got to go back to 1980 or 1978 to 82 was the inversion. It was a 4-year inversion. Whew. And it was much more inverted than at any other time. So that was a good time. Ultimately, that was a good time for stocks, but it was a rough, 4 years.
Wasn't a good time for stocks. It was a good time to be starting to accumulate.
Yeah, sorry. That was what I meant. Like, it's a good time to invest.
It was a good time to have not owned them for the last
That's right. 66 from 66 to 82 was the last big long-term kind of bear market or sideways market, as Vitaly Katzenelson would characterize it.
Well, you got to count 2000 to 2010, right? That's got to be a sideways market.
Yeah, I guess so.
But
have to ask Vitaly
still
how
hat
he
tipped.
characterizes
Yeah,
it.
we'll let Vitaly be the arbiter of sideways markets since he wrote the book on it.
Yeah, so that's a weird one. The 10-3 has been very predictive. That's the Cam Harvey one that's got some research behind it. He published in 86, and every inversion since then, he says it has to last for 90 days. But when I look at it, I'm not sure that is necessary since he published it anyway. But we're now a month into this current inversion.
Oh, we're a third of the way to the finish line on recession.
And then 6 months after that is when you actually see the recession, or the recession gets declared typically.
Now, what if you change the definition of recession? Does that change the?
It is an arbitrary. To be fair, it's sort of an arbitrary number, like two quarters of negative growth. When you could have that, the whatever small animal it is going through the boa constrictor, you can see the lump going through. It's funny to see the other side of that. Like, quite a few indicators that seem to front run margins, and we've talked about all of those. Just about every single security series or commodity has had that huge ramp and then fallen off the other side. And the ones that seem to be lagging, I guess, are housing, and probably the stock market too hasn't seen the full downside on the other side. But I kind of think that all of that leads to margin compression. And that means, that the E looks stretched if it doesn't move. So you end up with a higher PE without any kind of price appreciation, which probably means there's a little bit more to go in this thing. I don't know. I just intuitively think looks a little bit expensive to be bouncing from here, but who knows?
I think that's a fair assessment. Of course.
I've said that a few times in the past too. So.
Yeah.
Still looks expensive to me.
I've been complaining about margins for 5 years now. So
what is it? What's the argument for why margins should be higher? We've suspended capitalism.
Well, I don't know that I think generally the argument that I have made in the past is that we've gotten to a point where there's been so much consolidation, and there's so much politicians are so bought that I think that generally the idea I think margins come in here. I don't think you can have a recession without having margins come in. But I think that on a normalized basis, I could see industry structure being a reason that margins do come in. On the other hand, I mean, if the commodity super cycle thesis is correct, you probably do have some margin compression. But Pepsi here is prices are up 8%, and volume growth is up 3%, and that equals 11% revenue growth. Like, I don't know if some of this commodity pressure actually leaves some of these CPG companies, margins are going to explode in those.
Why are Pepsi's sales up so much?
It's all pricing. They're taking price like crazy. I think that they're starting to get pushed back. I think the supermarkets are starting to say, like, you're going too far here. But
sugar's addictive.
Corporations have pushed through price in a lot of ways. And the other thing is, I'm staying at a hotel right now. Hotels fucking suck. Like, there is no one working anymore.
Yeah.
The services are gone. Go to like Disney parks. Like, I don't know. A lot of these companies, I think that they cut in 2020 and they just said, we're not going to give you back what you used to have. And they're not cutting the price commensurate with that. So
there's kind of like
does a recession drive pricing down? Hopefully.
Sort of like a service shrinkflation kind of happening, huh?
Yeah.
Yeah.
I think the margins could be attributable to one, returns on scale of some of these giant internet businesses that just made a ton of money and required very little capital to do so. Two, globalization allowed for corporations to lower their labor component expenses and therefore kept margins up for them. Three, total lack of any real antitrust activity in the last 10 years. So kind of add all those up together and it's, and then number four, lower the corporate tax rate in 2016. And you end up with I think that we have been pretty favorable to corporations in the grand scheme of the amount of pie of economic activity that's been created. Their portion of keeping it has been pretty high relative to other points in history. And so, there's lots of ways that can go the other way, potentially, whether it's taxes or deglobalization or
guillotines.
Yeah, or guillotines. So
I don't know. I prefer not to go that way.
I would rather not as well.
Maybe a little bit of extra unionization. There's a little bit of that going on.
Yeah, it does seem like although this is like kind of happened in the 70s as well, right? Like there was unionization was a much more popular topic in the 70s, and then it kind of died for 30 years, but seems like it's coming back somewhat.
I wonder if Amazon sees it, what that does to Amazon.
What, Amazon gets unionized?
Yeah, is it already the shop floor unionized?
Well, there've been I don't know how many unions are there. I mean, there's so much waste in that company. I think, despite the books that are written, I mean, Alexa's losing it's starting to get public notice, like 10 billion a year or something. Like,
how is that possible?
I guess that at the core of it, anything that hurts Amazon, I think hurts mom and pop 2x. So like, there's I mean, maybe the world changes and maybe, but Amazon's cost of capital is lower. Their ability to deliver is much better. They've trained customers in a much better way. I just think it would be really tough to compete against them. Between them and Walmart, I don't see how mom and pop aren't a secular loser. But hopefully that changes because I don't like that outcome.
We forgot to talk about Burry's 13F last week.
Okay.
We talked about it at the start of the show and then we didn't get around to it, and we got a few comments about that. Do you know what's in his 13F?
Yeah, his weightings of charter and curate are completely reversed and should be that's the wrong way to lay that bet, in my opinion. But I tend to I'm not on board with I shouldn't say I'm not on board with curate, but it's not where my money is. But I think turns out John Malone entities are actually pretty smart, according to Mike Burry.
He's got 24.34%. That's the change. Top bars. So his portfolio, I can't read this.
24% curate, 37% geo.
That's the prison.
Yeah, 15% in CXW, which is some
civic.
Real estate related.
Corrections.
7% charter.
That's Core Civic is Corrections Corporation of America. That might be another.
So yes, I don't know how true to reality his 13Fs are. Do you guys have a sense of that?
Yeah, I agree with you. I know
what you're saying. Necessarily. There might be shorts. There might be
options.
I don't know. It's kind of hard to really tease too much out of his and say like, this is what the book really looks like for him.
Yeah, and if I recall correctly, at least he used to trade on technicals. So I don't know, if like
In and
Curate
out.
broke after earnings, so I don't know if it's a current weighting. I do think those weights are. I would be much more comfortable sleeping at night with those weights reversed.
He's heavy into those things though. Gee, those are big positions.
Yeah, I mean, I got to hang out with the Liberty people last week. And
How was your trip?
I really like David Rollinson a lot. But there's a lot of moving parts going on in that business right now. And I'm not sure anyone that says that they know what's going on actually can tell you with a high degree of certainty that that's true. So to put 27% of your book in it, I don't know. That just makes me nervous.
Yeah, Rod Altsman says, Barry tweeted, you have no idea how short I am on the 15th.
Yeah.
That's kind of running.
But regardless of how short he is,
still long something, yeah.
From like a position sizing standpoint, it makes sense to me to lean into companies that are on strong fundamental foundations. I don't think
like selling cat sweaters.
Yeah, well, I don't understand. Like I would not size into something on valuation alone. I would valuation would be like a necessary but insufficient condition. And I think that right now with the distribution of outcomes and Curate, I don't fully understand that weighting. But he's smarter than I am.
He's a wild man.
And he could be out. Like I really don't know.
Yeah, here's another one. Icon has a GME short.
Yeah, well, he should. If I had any capability to short and manage a short book, GameStop seems like a pretty easy one.
Do you want to be short those meme stocks though?
Well, over time, you're going to be right. I just don't know how to manage short exposure.
Just keep them small.
Keep it at zero.
Yeah.
That's how you manage it.
That's exactly the right size. That's exactly small enough.
In fairness, though, I do think long short's going to have a good few years here. Kind of got too bombed out.
Yeah, it tends to happen. It has that effect every now and again. What about Bob Iger back at Disney?
Bill, you're a resident media expert.
I mean, I guess it depends how you want to read it. I find it hard to believe that I guess I'm open to being wrong on this. But it's hard for me to think that a company that requires one CEO to come back, it's hard for me to get amped up about the confidence in the terminal value of that if they're basically saying Bob and only Bob can lead us through this.
How long was he gone for?
He just
2 years, but he wasn't
pandemic.
gone. He was undermining everything that Chapek did. All the fucking negative headlines where Iger leaked. That guy never went away. And
he was just zooming in. He didn't want to wear a mask at the office. He was just like, I'll let you guys take it for a couple of years, then I'll be back.
Yeah, this is why I don't like Warner Brothers. I don't like Paramount. I don't like Disney. I think that they have legacy profit pools that are being completely attacked. I think that they're misallocating capital and direct to consumer, chasing a multiple that Netflix had that is now gone. I think Netflix has by far the greatest strategic positioning in the entire media sector, and it's got one focus. They don't need any outside capital anymore. I think it's just one big bloody knife fight. And I think that Iger left and now he's got to come back. And I don't know, maybe they spin off ESPN. I think Comcast is probably the cheapest combination of broadband and media in the entire industry. And I like Charter because I don't want to deal with any of this shit.
Does Netflix have internal cash flow from operations enough now to support all that CapEx and development?
Yeah.
Does? Yeah.
Oh, yeah.
The Disney model, like for all of everything sort of flows downstream from this. Every few years, they bring out a tentpole movie where they have a new Disney princess, and that captures the hearts of a generation of 7-year-old girls. And then they ride that through to, whenever the next generation come through.
Yeah, I don't know
that's
that's
a tough
true,
business
man.
model. You don't think so?
I think that they've had to protect their competitive position through acquisition, not through rolling out the next organic film.
Marvel and Star Wars, you mean?
Yeah. Marvel, Star Wars, and Pixar. What's
And
Disney
Pixar,
without
yeah.
those? All
Oh,
of them
no,
are acquired.
Well, I think Encanto was the last, or there have been a few since then, right? I honestly, I can't keep up.
Yeah. I mean, look, it's a fantastic company. It's got an advantage business model, but I just, it's hard for me to look at what's gone on and be like, yeah, this is positive.
Healthy culture.
Well, yeah. And like, let's put it this way. At a minimum, that business is not a business that an idiot can run.
Yeah.
Mm-hmm.
So I think that like, if they're saying we've got to bring back the one guy that we think can bring us through this current, strategic predicament that we're in, what does that say about the franchise?
It's interesting to compare that,
Mm-hmm.
Iger, we didn't really know who his successor was, I don't think, until he sort of stepped down. You compare that to Buffett at Berkshire. The two guys who are going to be Ted and Todd, they joined more than a decade ago. And everybody knows that, they're going to take over the investment side of the book, and probably the other gentleman going to be running ops. What's his name?
Abel,
yeah.
Yeah, I think, honestly, I think Disney would be better off if Iger was just honest and said, I'm not leaving here till I die.
emperor for life.
Yeah, I mean, that's kind of what Buffett, like, that's Buffett, right? Like, I'm going to have to lose my mind or die before I leave.
But yeah. Buffett owns it. Buffett's...
Iger does too at this point. Like, I mean, he has flirted with leaving for how long? And then he finally left. And then he undermined the current CEO by leaking stories to the media the whole time. And now he's the one guy that can come back. You're going to tell me he doesn't own that? This is the Iger show, folks.
But he relies on other people's votes.
Sounds like a great hero's journey kind of story. It is one of my great regrets that we didn't write up some bullshit and get it greenlit and sell it to Netflix in the last 5 years.
Seriously.
Many of these companies. Missed opportunity, we'll boys.
I'd get really constructive on media generally if they would all just kind of like lean in back to the bundle and say, this is the only way we're going to compete. And, they're devaluing their cash cow by trying to invest in subscale direct to consumer products. And it's all one huge misallocation of capital, in my opinion.
How hard is direct to consumer though, really?
What?
Famous last words. How hard could it be?
Well, we could barely get a show on once a week.
Well, I just mean, the technology problem that's been solved many, many times. Like you turn on your Apple TV, whatever kind of TV you got, and there's all of those little tiles there for whichever you want to watch. And I spend my time in whatever, Netflix and HBO, Disney, Prime, like those ones. So those guys seem to have all figured it out. It's not technologically.
They haven't figured out how to make money.
Yeah.
So if you like a business, it's a hard business. It's an easy thing to throw shit against the wall, though.
Cable kind of has the monopoly into your home, so they sort of charge you whatever they want for the internet, and then really whatever they want for the cable bundle, and then everybody else just feeds downstream from that. But we're not going back to that, are we?
I don't know. Check out Bill's podcast that he did, this last one. It was really good.
Yeah.
What's the conclusion?
Yeah, Craig Moffat. After that, listening to that, I was like, okay, I just need to never be on the other side of a trade from that guy.
Yeah, Craig's good.
That was my takeaway.
I was checking the fear and greed meter today. We're back to peak greedy for 2022.
Greedy?
Yeah, well, it's greed. There's extreme greed. We haven't got to extreme greed. I'm just saying we're as greedy in 2022 as we have been at any point. And actually, when you go back and have a look at
what is that? Just like barely off of the fear one?
It's greed. It's greed. It's like 75 or something like that out of 100
right
72.
now.
Yeah, I think so.
Wow.
Makes sense, man. Think about where things are trading versus what might be coming. I would argue it's pretty greedy.
Where they were, yeah, for sure. And that, the ARC complex keeps on getting flows. So people certainly haven't been hit with the cold spoon yet. Yeah, there's a lot of dip buyers out there. Actually, there's some sad threads on Tesla. When I go through and have a look at those, I'm going to forget which account keeps on grabbing them, but I think Mr. Skilling, one of the Skillings is, or Kenny Lay, I don't know who it is. Somebody keeps on capturing one of them. One of them keeps on capturing all of the, there's like a Tesla owners group, and they've been conditioned to buy that dip repeatedly. And like now they're starting to ask questions about whether you borrow money to buy some more dip.
No,
Really?
The answer is no, don't do that.
Yeah.
I'm sure somebody would be like, what do you know? You don't know anything. I know that it's trading at under a 2% free cash flow yield and it's a fucking car company. That's what I know.
Ugh.
The problem is that when something runs up that much for that long and you're conditioned to buy the dip repeatedly and you get rewarded for doing it, that you don't know how to turn that behavior off when it goes the other way, and you keep on doing it and you get destroyed. Like that's how you make a lot of money on the way up and you give it all back on the way back down.
Yeah. I mean, look, what he's done is incredible, and the financials, to the extent that they're not fraudulent, are pretty impressive. But I don't know, like, man, you got to have a lot of good things happen from here.
Well, Toby, walk through that little math exercise you explained to me like a couple days ago that you did on it.
I just took the earnings and looked at what it needed to compound at, what it needed to grow at to justify the current valuation. And I got to, it needed to do 30% a year for the next decade to justify the current valuation.
That gets you like a market rate of return if that happens?
Well, that gets you a market rate of return. If it does 20% a year for the next decade, it's 90% overvalued. And so then if I just sort of looked at it and put in some rough assumptions, what I thought would be a reasonable thing to do, still being pretty optimistic, and I get $30 to $60 in fair value for it right now.
Per share. Yeah.
So that might mean that, I would want to buy it at like no more than $20.
And today it's at
160, something like that.
Yeah.
It needs to.
I mean, that's that 20% growth rate versus 30% growth rate is a bit of a cold water, isn't it?
Having said that, though, it has done. It's like 50% year on year. So if it keeps that kind of number, then.
Man, if only there were some base rates that could help us try to assess what are the chances of this. I
mean, they seem to have been reasonably successful at hitting those numbers, and some of it is falling through the bottom line, and it is generating free cash flow.
I mean, look, if I were going to argue against the base rates, I'd say it's already sort of escaped base rates, and they've done it without any advertising. Like there's something special going on there. It's just eventually like they'd have to own the entire car market to justify some of these numbers. And like, you know what? I like Samson. Samson's a loyal listener from day one. I hope Samson makes a ton of money on this thing. But it's not something I'm going to make money on.
I agree.
Do you want to do the FTX, or do you want to do the cells? Do you want a palate cleanser, or do you want to feel sick?
Sell Tesla.
Let's cleanse the palate.
Yeah, okay. Let's do the cells. Good idea.
All right. Oh, I thought that was FTX.
That's Schadenfreude.
Yeah, I guess, huh? All right. So this week have you guys heard of the term apoptosis before?
All I know is that the mitochondria is the powerhouse of the cell.
Correct. And did you know you get your mitochondria from your mother only? I don't know if you knew that.
Not. But... Thanks, Mom.
Yeah, thanks, Mom. So apoptosis is this biological process in multicellular organisms that's really best described as programmed cell death. It's that apoptosis is ancient Greek for falling off of leaves from a tree. So imagine, basically like the decay of something. And it's a highly regulated process within the body, and it's happening constantly. I mean, it's happening inside each one of us right now as we speak. And it's basically like biochemical events that lead to changes within the cell that lead to its eventual death. And the average adult loses between 50 and 70 billion cells each day to apoptosis. So there's some turnover that's happening inside of you at all times. So it gets triggered, though, when a cell, there's a couple different ways that it happens. It can be triggered through either intrinsic pathways, which are basically like things inside the cell that make it happen. And a cell can kill itself because it senses either cellular stress or damaged DNA or mRNA, heat, radiation, nutrient deprivation, viral infection, all these kind of internal things that are happening that will send a trigger like, okay, blow this cell up. And it can also be triggered externally by what are called extrinsic pathways. And the main one of that is this thing called TNF alpha, which is like, it's a cytokine basically that's like produced by these little cells that are called macrophages, which are basically like the cellular cleanup crew. They come in and like eat cells that are blown up and get all the chunks of them that would maybe harm the cells that are around it, and it cleans it up. But think of it like basically that TNF alpha pathway, the extrinsic pathway, is basically like comes in and pushes the self-destruct button on the cell from the outside. So defective apoptosis sensors are implicated in a very wide variety of diseases. And so like if you have insufficient sensors, actually one of the results is uncontrolled cell proliferation, which we know better as cancer. So this it's a hugely important thing. And you know, to zoom out a little bit, you know, if you think about your entire body as all these cells, and think about it like a herd of animals, the removal of the weakest elements of the herd allows the remaining herd to move faster, have more resources available. So the body's always kind of culling the weakest cells to leave a better version left over. And so really cell death is programmed directly into your DNA from the start at the instruction level. And before anything gets built, it already knows how it's going to be torn down if the right signals occur, right? So now let's bring this back to the real world. And Annie Duke has this new book out called Quit. And it's all about basically like deciding when you make decisions, how do you decide to quit or not? And one of the great takeaways that she had was this thing that she called kill criteria. And the kill criteria is like a simple enough idea. It's basically what events or circumstances would cause you to reverse your decision that you're about to say yes to. So before you say yes, you set the kill criteria so that you can know when do I need to get out of this decision. And you don't then fall subject to all of these problems like, you know, sunk cost bias that can creep up when you are trying to make the decision in real time, whether it's time to quit. So you want to be like the cell that has the DNA that's already pre-programmed with apoptosis that happens if these certain criteria are met, and your decisions should be treated similarly. So for instance, you know, maybe it would look like, you know, if you're going to buy this thing, you would say, you know, I'm buying it, but if it gets up to a certain valuation, I'll sell. So there's a kill criteria that's already built in. Or, you know, let's say if management reprices options, or if stock-based compensation comes in over some number that I find too egregious, I'll sell. You could set all these criteria that would cause you to reevaluate and possibly exit a decision. And similarly, like kind of the inverse, if you decided to pass on something, you could set the kill criteria of that decision to pass. And so basically like, oh, maybe I'm not going to buy this due to valuation, but if it got to this valuation that I found attractive, I would buy it. So that's your kill criteria for a pass. So it's a great way to counteract like your sunk cost bias, and also like escalation of commitment, which is something that can happen when you get into a situation. And it kind of lets you peek around the corner kind of in a pre-mortem way to see like, okay, what could go wrong here? And if it starts to go wrong, I'm going to short circuit it before it turns into basically like cancer of your decision making. And I'm going to cut this off and save the resources for the more healthy decisions that I'm making. So, you know, it's biology has these instructions that it uses that are relatively simple in their execution, but they create this very complex and emergent behavior that leads to, you know, you and I being able to talk right now. So the nice thing is that just because you made a decision, and you could look at your entire portfolio today and you could still come up with kill criteria for everything. It's not too late. So going through all of your names and writing out what would have to happen for you to decide to exit that particular name. You could do it even if you've already owned it for a decade. It's better. It's one of those things. Definitely, it's better late than never. And you know, you can go through your portfolio and you can actually use that an intrinsic pathway like the cells, which would be holding yourself accountable. And I would say that it helps a lot to write these things down. And so you could keep track of them, and keeping it in your head is a very lossy and dangerous way to do it. Or you can use an extrinsic pathway outside the cell, pushing that by having Annie Duke recommends having a quitting coach, she calls it. So basically someone that would hold you accountable to your kill criteria. And therefore you execute on your best intentions, and you can't kind of lie to them as well, as much as it's easy to lie to yourself. So take a page out of nature, and she's figured out a lot of smart ways to do things, and apply that to your portfolio.
I like that approach, JT. There's somebody asked about a stop loss. I think I've seen a paper on stop loss orders. I can't remember if it's specific to value or if it's generally, but particularly in value, stop loss doesn't work. You just get whipsawed out of stuff.
I would say the first order thinking of execution of criteria is based on price, but the even better version of it is based on corporate fundamentals, corporate actions. Those are the things you should really be looking for as the drivers incrementally up or decrementally down of value that's being created within the business, and not so much using price as this kind of chasing mechanism.
I like the
I guess
catch.
It depends what your strategy is. If you trade it, if you explicitly have momentum as part of what you're looking for from a price perspective, then I can understand a stop loss. But a stop loss is not something that I would use.
It doesn't help you in value, particularly because you're already saying this thing's trading below what I think it's worth. And then if the price goes down, there shouldn't be any more information in that. It's just more, irrational than it was before. Having said that, there are lots of instances where you might not want to buy more too. I wouldn't be making a decision on selling just purely on the price action.
I can't say this for sure, but my gut tells me that if you are not willing to double down as it goes lower, or if it was to be cut in half, then you probably shouldn't own it at all.
Who's got that line? Is it Jay-Z or someone says if you can't buy it twice, you shouldn't buy it once?
I haven't heard that.
Something like that.
I don't know. I don't know. I have mixed feelings on this. I continue to think Hempton's post is like the most good one. Like probably the best post that I've ever read. And like I just think
will you remind everybody what he said?
Yeah, so like I mean I'm gonna mess it up, but go to Bronte Capital and something about like when to sell or when to like doubling down. Basically, he did this study of like guys that have blown up, and doubling down into leveraged situations is probably not a great idea. I guess the longer I do this, the more I think
the other one was
I'm down a lot on a position. I'm probably wrong, as opposed to I'm probably right and the market's wrong. And I think there's a lot of nuance in that. So like, I mean, Meta, I recently quadrupled my position, but it was small. So it's not like huge now, but I think that the facts changed enough that, like I'll kill that. If Zuckerberg continues to spend this much for the next 3 years, then I gotta sell this thing. Right.
Did you see there was a rumor this morning that Zuck was out? Did you see that on the Twitter? There was a rumor this morning that Zuck was it was like leak.co was the site, but it got RT'd around enough that Zuck was gone and the stock was up 1.1%.
Boy, how quickly we can go from zero to hero, huh?
It's almost like price drives narrative, Jake.
It's been a funny story with Facebook though, because they launched and they kind of fell on their face out of the gate a little bit. It traded well down off the launch, I remember. And then it traded up and he was a genius, and now it's back down and he's a goat. He's lowercase GOAT, not the goat.
Yeah. A goat, not the goat.
But
I think reality is probably somewhere in between and closer to he's done a whole lot more than a bunch of financial analysts putting numbers in Excel sheets have ever done. So I'll take him.
Turns out Australia just scored in the World Cup against France. So this might be the only time we're ahead of France in that game. So Aussie.
I don't know. Like there was some negative things said about Liberty recently. And I just think, I think a lot of these things So if you look at Liberty stocks, they haven't done very well lately. Like Live Nation, if Live Nation hasn't done well, I might argue that was a valuation issue. Formula One, they've done an absolutely incredible job with. The Braves,
it was tough with it all being shut down.
What?
It was tough with it being shut down through COVID.
Yeah, and what they're doing and the hotel they're developing and the race that they're going to have in Vegas, like I think from a business perspective, the value creation has been very real. I think when you look at the Braves and you look at what they did with the battery, it's like very real. I think when you look at what they've done with charter, it's very real. So I just think that there's these periods that stocks go through where when they're not working, people are like, these people need to be replaced or whatever. And it's like, well, kind of our job is to pick the stocks that will work. Their job is to deliver value within the business.
That's a good point.
If we pick stocks that don't work, that's not really their problem, right?
They missed earnings.
Now,
did they miss earnings or did all the analysts miss earnings?
What?
I said they blame the company for missing earnings, but really it's the analysts who missed the earnings, right?
Yeah, or like I don't know, life happened, right? Like running a business is a lot harder than a spreadsheet.
Put that on a t-shirt.
That'll be the next Value After Hours merch.
Do you want me to do FTX?
Yes, yeah, let's do it. Let's go into fraud.
I had to block a bot.
Oh no.
So this is from Alameda. It doesn't have a date on it, which is a little bit annoying, but you can kind of get they say that at this point in time, they were managing over $55 million and trade $150 to $300 million a day. And so I'm guessing that this was pretty early on. But this is the second sentence. They introduce themselves and say who they are. Then they say, "We are the best crypto trading firm in the United States and among the most serious firms across the globe." How much can I put you guys down for so far?
All in.
Yeah, I was going to say everything.
Is Bain doing my research for me?
They are. And here's the second page. So the way that you could invest in them, they offer one investment product. It's a 15% annualized fixed rate loan with no lockup, whatever that means. So they were just basically borrowing from you at 15% and they were then punting it in the market.
I like to know lockup, so I can ask for my money back at any time, and they're going to give me 15% fixed, and I can get my money back.
This is better than a checking account.
Sounds pretty good so far.
And you're telling me this is a serious firm?
No risk, right?
Here's the killer line though. This is under the heading high returns with no risk. These loans have no downside. We guarantee full payment, the principal and interest, enforceable under US law and established by all parties' legal counsel. We are extremely confident we will pay this amount. In the unlikely case where we lose more than 2% over a month, we will give all investors the opportunity to recall their funds and we will guarantee full repayment.
It's a good deal. That sounds like a great deal.
Sounds like no risk.
Those blokes have gone to all of the most sophisticated investors.
That worked,
the venture capitalists, and they've raised hundreds of millions of dollars.
That piece of paper worked.
I don't know if it's that bit of paper, but like if I'd seen that, you'd have to start thinking this is a fraud. I mean, I see those things all the time, like people who like they've got a currency trading strategy. You load up the account and we'll go blow it off for you.
Yeah, I don't think like my head doesn't go to a fraud, but it goes to don't give these people money. Right.
But you can't make claims like that. You can't make claims like that. It just shows that you don't understand what you're doing. Nobody who understands what they're doing is going to make claims like that.
Well, I guess what I don't want to be is I don't want to be a guy that's like, I would have seen a fraud that other big firms didn't see. But what I am certain that I am is a person that would not have given them money. I know for a fact.
You don't have to. I wouldn't necessarily have known that it was a fraud, but that's pretty smelly, that kind of language. And anybody making those claims, like you got to be, at the very least, you got to be away from
mid-teens returns with no risk and a call option at like the capital provider's option. That's something that I will not find myself involved in.
They're trading. Crazy.
John Q. Public can stand anything except 2%.
Well, that's the old Charlie thing, right? Like back when valuations were much higher, like what should you do? Reduce your expectations.
What do you think it is? Is it the 15%? They were just like, well, it's a modest goal. Maybe these guys can probably do that. It's not like this. They're not saying 50. They're not saying 100%.
Yeah. I mean, S&P's doing 16. They're only offering 15.
I think the most annoying thing is that there were typos all the way through it. I can't imagine how that stuff
Is that
works. Right? Yeah. Just like the sentences don't make sense.
Warren Buffett with 1 T.
I got another EV/EBIT ratio update for you.
Okay. How
So
spread are we?
We're off from the highs, which was last month. So September 30 was as wide as it has ever been, wider than 2009 at the bottom. 2000 at the peak and 2009 at the bottom. I don't know why that is, but that's when the spreads were widest. And so we're at the third highest reading now. We had the second highest reading in August, then the highest reading in September, and the third highest reading in October. So it's closed a little bit, but still hasn't moved at all. And there's some research out there. Robico have come out with some research. Matthias Hanauer, sorry if I'm mispronouncing that, but they've got a paper out saying that value's cheap. I RT'd it into my Twitter account. If you're interested in reading it. Same thing that everybody else is saying. AQR, everybody agrees value's cheap. Has been for a long time. Relatively cheap. Yeah, thank you.
Small's cheap. That I have a fairly high degree of confidence in.
Yeah, the smaller you go, the cheaper you get. Typically,
probably, but then there's probably
always.
Like some cutoff where you get into a lot of like fraudy shit. But I generally agree.
I think if there's I think as we've discussed before, a few podcasts ago, quality really works well in small caps because there's so much. It's just by eliminating all the bad stuff. Actually, Buffett had a suggestion like that too. He was like, I could run an index just by eliminating the worst, like 15% of companies. You do so much better.
He's the new Jack Bogle.
Jack Bogle. That's a good idea, actually. I don't know there's probably somebody's out there doing it. I don't know what you'd call it. That's the key. You have to come up with a good name for it.
Index Plus.
Index minus.
Yeah, I don't know. Then you miss out on. Well, it's not fraudy. I don't know. I don't know how quality it was, but you guys know Chuck Gilman. Chuck pitched me on Build-A-Bear in like 2019. Look at that stock.
What's it done?
I think it's like a 9x.
Really?
Yeah. It didn't look hot, but that's how value works, right? So
Build-A-Bear.
What do they do there?
Build-A-Bear.
How do they fix it?
It's like a
Better Bears.
Yeah, like you go in and you make stuff.
Yeah,
like
you pick the
I know
color
what it is. I'm saying, how do they improve it?
I don't know, man. I haven't followed it. I looked at the stock the other day. I was like, holy shit, Chuck pitched me this like 3 years ago.
Yeah. It was around. It was cheap. It was cheapish. Chuck does a good
Not
stuff.
a chance I would have held it for a 9x. Not a chance. I probably would have sold it after a 40% pop.
Oh, that's the problem with crypto too. I'd have sold every one of those things a week after I bought them. No chance of holding through all of that.
Yeah, I bitch about selling Intrepid Potash at like $10 or whatever. I bought it at like $8. I wouldn't have held it for the run. No way. Well, I've lived through too much pain with that company.
You guys are a bunch of paper hands.
But even if the rule is that but this is the problem too, that even if you have the rule, you're just like, I'm never selling this thing, and it goes up 100 times, then it goes back down 80% too.
I'm not really paper hands though, Jake. Like that's why I need to buy shit that I can, like, that's why I own cable. Like I actually own it. People may think I'm stupid, but like I own it. I can't, that's kind of why I focused more on underlying businesses that I can own. Cause otherwise I'm like, oh, the price ran, I'm out. I don't know how to hold something that I think is junky, but cheap. I don't know how to hold that once it rips.
Yeah. Buy and sell.
Yeah. It is kind of interesting to think about, like, what's the right metric to use at different time points for a business, especially a cyclical one. So you might be able to make the argument for something like maybe oil, or I don't know, maybe some of these other highly cyclical commodity type of companies, but like I kind of like the idea of buy on price to book and sell on PE.
Yeah, I could see that. So you're buying on balance sheet and selling on cash flow.
Yeah.
Yeah. I mean, I kind of get that.
I like
I'll tell you what, I went into Restoration Hardware the other day, and I'm sure it's going to be the best performing retail stock in the world. Man, that is some shitty shit.
Really, the merchandise
not
is
good.
low quality.
Yeah, I mean, just like walk around the showroom and like look at the price that they're charging. And then find another furniture store that charges prices similar and go like touch the stuff, pick up the samples, wave them around. It like the wood feels like paper.
Really?
Maybe it still needs to be restored.
Possibly. One of the bowls or one of the tables that was on the showroom, my wife was like, is that an optical illusion or is the thing like bowing in? I was like, I don't know.
It's supposed to do that.
Yeah, so nothing spills off.
Yeah, I don't know, man. I like I said, I'm sure it rips, but I just cannot get there on that business.
I was in Sears yesterday getting some birthday presents for my wife, and those prices are unbelievable. Congrats to
How much
Buffett
does a
on,
box
like,
of C's cost now?
I wasn't looking at a box. I bought she likes the dark chocolate peanut brittle, you buy the little bag.
Yes.
The little bag is $14. I was just like, this is
It's like a it's like $8 a bite.
there's like, yeah, that's probably not far. They're probably like $2 each or something like that, $1.50 each, and they're like, an inch square.
Jake, you asked the wrong question anyway. It's not how much does a box of chocolate cost. It's how much does it cost you to get a smile and a kiss from your wife.
There's a lot of margin in that smile and that kiss.
That's right. They're not selling chocolate. They're selling relationships.
That was amazing. And like you're getting this little cellophane bag and you got to go and buy it from, there's not much in those stores. It's like everything's up against the wall. But to be fair, they had like 6 people working on the checkouts and they were smashed. Really? Ridiculous business. Oh my God.
They sell a lot around Christmas time too. So this is starting to ramp up for them.
Yeah, this is the time of year.
I think they make all their money in December, basically.
That's right. I've read that too.
Or all their profit, I should say.
Why can't you compete with Sears as a little chocolatier? Why couldn't you just replicate that?
Nostalgia. I don't know.
Probably can in a different geography.
Or in a different kind of psychographic segment too. Like, I don't know if you got to charge that much money for it.
I don't know the name off the top of my head. There is a small cookie shop in Savannah, Georgia. That place is killer. I don't know what the margins on small cookies are, but I would love to see those financials.
Are they expensive? Do they sell them for a lot?
Fuck yeah, they're expensive.
And
I paid double.
How much is a cookie?
I'm an MBA. Here's my strategy. I'm coming in here. We're jacking up the prices 2x on everything. That's the strategy. And then every year I'm going to put the price up more.
Yeah.
Oh, Samson says Dubai and Abu Dhabi have new shops here. Have Sears shops in Dubai and Abu Dhabi. Wow.
I thought that brand didn't travel.
Yeah. There are a few around the States.
Fake news.
Well, if you're selling them for that kind of margin, you can fly them first class and you're still going to make money.
Yeah, it's like they're like iPhones practically on the value to weight ratio. Like supposedly that's why an iPhone can be flown around and it makes sense.
Do they fly the iPhones?
I think so.
Oh my God, that seems a bit excessive.
Well, I mean, think about the cost per pound.
Yeah, they're expensive. The Mac computer. I tried to buy a 27-inch monitor Mac. They don't sell them anymore, which I was surprised. But you can only get the 24-inch, or then you got to go and get the super size
shrinkflation.
Well,
cut 3 inches off.
They sell you the Retina screen, 5K Retina screen. That's like $1,600
just for the monitor.
Just the monitor, and then you've got to buy the computer separately, and the whole thing priced out at $5,000. And I got such a shock, I just shut it all down. So if anybody's got some smart ideas about like a reasonably powerful, good-looking computer, let me know, because I was offended. Honestly, it was so much money.
I got a Dell at home. It's fine.
Oh man, that's a bit dirty, isn't it? No, that's probably what I need to do. I need to go that kind of way.
Yeah.
Do you have the?
What do you guys think? What do you think? Like, if we're moving from
Dude, you're getting it down.
Like policy is to tax. Like we were kind of in a world where asset values were everything, and cash flow generation wasn't. Let's say that we're moving to a world where cash flow generation income actually matters. What do you think that does to California?
Well, nobody who makes their money in California. Everybody makes it outside of California and then comes here.
A lot of tech employees.
Oh, well, they're employees, yeah. But they're getting it
real
all for
estate
SBC.
for sure is a question mark.
Seems like a lot of tax revenues at risk.
Yeah.
California had a surplus this year.
There's some
maybe
like,
has had a few.
I think some tiny percentage of people pay like basically all of the state tax in California. So
it's gonna be interesting to watch.
And those people aren't, grinding 9-to-5 jobs. That's not how they got wealthy. So if you remove that financial mark-to-market wealth, yeah, I could see that being pretty impactful for
California's always been a bit boom bust, hasn't it? It does really well when times are good, and it does equally badly when times are bad.
I don't know about Cali. Nice thing about California is you got a diversified economy for the most part, but I just kind of wonder, I don't know. It'd be interesting to see whether or not the last 10 years has enabled policy that maybe isn't sustainable.
Well, a lot of California's
100%.
revenues come
How much could you borrow too at no cost?
Yeah.
I'd say there's a big hangover coming for everybody from this party. And I don't see why the hangover wouldn't be as big as the party. But
so why the fuck do we own equities?
Well, yeah, that's a fair question. Like there's a
because I think the three of us all agree on this.
But you can get stuff that's like, it's just objectively cheap.
Yeah.
And if you
that's the answer. You got to have something that doesn't have to grow that you're comfortable owning, I think.
Reasonable cash flows. Like I would be asking the questions that whoever, was it Todd and Buffett were talking about? 90% confidence interval for X growth.
This is the boring 20s thesis is it ain't going to be top line growth. It's going to be reasonably okay business that keeps its revenue at a level that it's profitable and it retires shares. And that might be the way that you win.
Yeah. I do think, my buddy Francisco is way smarter than I am, but he sent me an email on Formula One. That's kind of an interesting entity that I could see growing, but for some economic catastrophe. And I think it's trading at like 20 times free cash, which is definitely not cheap, but I don't know. That's a unique asset. I could see a long growth that's sort of not necessarily correlated to the economy. Though if everything takes a shit, hard to see it growing through that.
I think these are ideal conditions for value. I mean, I know I sound like I've got mono kind of mania when it comes to value, but I think it is the case that value has always done well out of, higher inflation, lower prices, better managers who can turn cash flow into stock buybacks and other things like that. This is a time for people who are better managers, better capital allocators will do better through periods like this. And there'll be fewer.
Yeah, I kind of wonder.
Less visionaries, more capital allocators, more operators.
I'd buy Meta. I don't know.
Well, if Zuck comes to his senses at some point before it probably doesn't matter. There's so much free cash flow coming in that they can probably waste it to the extent that he is, and it probably doesn't matter. But at some point, if he's 3 years down the road and we don't all live in the metaverse, then they've probably got to switch those cash flows to buying back stock, in which case it'll probably do quite well.
Yeah.
They're doing some buybacks.
That's my pre-mortem on it, right? If he continues down this path for 3 years in the face of all evidence against him, but I think a guy like that has earned the right to say, I'm going to make my bet and I'm not going to turn my bet off because I'm going to miss some quarterly numbers. Like I get that.
I agree with you. He probably has earned the right, but he's also got the only shares that count. So it doesn't really matter.
That's always been the deal.
Yeah.
You were ride or die with him every time, the whole time. Didn't matter.
We made it, fellas. Full time.
Is this the last one of the year?
I think we probably try and
No.
get one more
No,
We'll be back.
or
next
two
week.
more, one or two more. Are you done?
no, I'm not done. I just didn't know if we should update the audience.
Yeah, I think we can get two more in.
All right.
I got a big
There you have
announcement
it.
for next week. So
Oh, good. JT's got a big announcement, so you got at least one more in. All right, dudes, this is fun.
All right. Have a good one.
Have a happy Thanksgiving, everybody.
yeah,